Alright, this video is for a friend. This is Robinhood. Once you get Robinhood set up, go up here to the search section with the magnifying glass. And then you want to create this high dividend yield scanner. So in order to do that, right here where it says create, create a scanner. It's been a minute since I've done this, so add a filter. No, that's not how you do it. Hang on. Oh, here, I think this is it. Alright, so click on the show more option. Then scroll down to here we go. High dividend yield. Okay, here we go. No, wait, that's not it. Hang on. Oh, here's the yield. Wait, what? Okay, here we go. Dividends over 5%. $109 items. Okay, here we go. So like this one here, CMCT, that one is obviously probably either bankrupt or going bankrupt. CMBT, I think they're going under also. So these higher yielding dividend stocks are the high risk ones. So that's why I may only have like maybe 20 bucks in there. The check mark ones are the ones I know I have dividends in. Now there's another filter you can do where it'll say show the ones that I don't have. I'm not sure exactly how to do that yet. Let's see if I can edit this. Well, anyway. So that's how you create, and then you hit save. Oh, here's how I do it. I'll go all. training purposes. Now, I have to figure out how to add that filter. Oh, here it is at the very top. Stocks I own. So you can say, show stocks I own, don't show stocks I own. And then you can basically list it by the ones you own and list it by the ones you don't own. So my other one that I have, let's go back. So this high dividend yield one, I basically have it to where it does not show the ones that I already have. So the highest dividend yielding stock that I don't own is 16.85%. Basically what I do, especially with the high yielding ones, they're a lot more risky. So basically what I do is I'll just go in here and, you know, I'll look at the yield, which it's 17% almost. So the first time I buy, I'll throw in $20. And then every time after that, I'll just look at the yield. And if it pays like 16.85% yield, I'll round it up. You know, 16.5 or higher, I'll round up to 17. So I'll throw in $17. Unless I don't, you know, unless I don't have. Sorry, that's a different scenario. So I'll throw in $17, white horse. You know, when I invest in this. Right now, I'm focusing on only investing in stuff that pays more than the interest rate on my debt. So right now, my highest interest rate is on my credit cards, which is 20 and 30%. I've almost got my 30% credit card paid off, and so next I'll be working on my 20% credit card. After I get it paid down, after that I only got my auto renewals on it, so I'll pay it every week and then I'll invest. So after that, after I get the credit cards paid down and I'm not accumulating debt anymore and I'm not paying interest anymore on the credit cards, I'm just doing my auto renewals on there and I'm paying it every week when I get paid. Then my next highest interest rate is my pickup truck, which as soon as I sell my dad's house, I'll have the money to pay that off. But I'm trying to refinance another property, so I don't want to pay that off, because if I pay it off, it'll ruin my credit. It's weird. If you pay off or sell a house and you don't have that, and you're not making that monthly payment anymore, your credit score actually goes down, not up. So if I pay off the pickup truck, my credit score is going to go down, not up. So what I'm going to do is I'll put the money to pay it off in the bank account, but I'm not going to pay it off until I get this loan for this other property. Then I'll pay off the pickup truck. But that pickup truck, the interest rate on it is 14%. So until I pay off the pickup truck, then I'll start investing in dividend stocks that pay more than 14%. Because I want to keep investing in stocks that pay more than the interest rate on my debt. So once I get the pickup truck paid off, then the interest rate on my debt will be about 5%. My current mortgage is only 4%, but I don't know what the new mortgage is going to be. So we'll just say ballpark figure is going to be about 5%. So after that time, I'll start investing in anything that pays more than 5%. Once I've got my stocks built up to where they're paying me to pay all my bills, or I get my mortgage paid off, then I'll start investing in stocks that pay less than 5%. So yeah, anyways, so that's my formula. I'll throw in 20 bucks, and then every time I get paid, I'll reinvest the percentage that the yield is. So like 16.5%, $17. So real quick, my stocks are down for the day. They're down for the week. Down for the month. Down for the quarter. But they're up for the year. And they're up overall. That being said, I made about $1,000 last year on dividends, so I'm technically up $1,200. So 16 or 17 if you count this. Plus, I made some money off day trading, but not so much day trading on Cash App. Mostly day trading on, Robinhood. Mostly day trading on Cash App, but not so much day trading on Robinhood. I mostly use Robinhood for my dividend stocks. I did buy some Trump stocks this week because they were down. So I'm day trading with Tesla and Trump stocks, but that's pretty much it. On the Cash App side, basically I'm moving all my assets over to Robinhood unless it's like ARR. ARR is my favorite Cash App stock that I can buy here today, but tomorrow I may not be able to buy it. It's like really weird. One day they'll let you buy the stock, next day they won't. And I think it's kind of like that situation with GameStop, but I'm not sure. So I have backup apps just in case I can't buy the stock at Robinhood. So I buy ARR at Cash App. I have some stock here. It's down $30. I can't say that I've made $30 off of it over here. But I might be pretty close because I've had it for over a year and it's been paying me on average probably about $1 a month plus stock lending payment of a penny every month, which adds up, but it's not very much. But anyway, so it's probably just under $1 a month, but on average. So I probably haven't broke even yet with the stock, but all the stocks are down right now. Next year they should be up. So any stocks you buy right now, you're gonna most likely make money on, unless they go bankrupt. And I would say only 10% of the stocks are gonna probably go bankrupt. So you have a 90% chance of making money. So there you go. Let's see here. ORC. That's another one that they are gonna let you buy today, but they normally, every time I look at it, they don't let you buy it. This one I cannot buy at Cash App, so I buy it at Webull. Because you never know over here whether or not they're gonna let you buy it or not. It's weird. So basically, I just look at my notifications. So like this one, I got paid 25 cents. I went and looked at the dividend yield. It pays 14.29%. So I bought $14 worth. 2 shares. This one I couldn't buy by the dollar. I had to buy by the share. Some of them you have to buy shares only, and some of them you can buy, you know, say $2 worth. But this one here, I had to buy by the share, so I bought $14.22 worth, which that's about what the percentage of the yield is. So it kind of worked out. But anyway, so then there is this one. I got 28 cents from this one. This one I can buy here. It's down $5. The dividend yield is 16.16%. So I will buy in dollars, $16 worth. And this one will let me buy by the dollar. See here, it's fluctuating. I can sit here and watch it and buy 2 even shares, or I can make it easy on myself and do it this way. Boom. And I say easy on myself because of my dividend tracker. So now, this is how I keep track of my dividends. So AGNC.
Way station ahead.
There it is. Add trade. Here's all the different apps that I have for stocks. Like I said, Robinhood's my primary. So I got 2 shares. Now, see, with the 2, I don't got to type in 1.99, blah, blah, blah. I just type in 2. And then I paid $16.04. Oh. Okay. 802. 8.02. And now, I don't remember what this number was. 14 or 144.60. So now this might go up. Now, this is my dividends after tax. There is 20% tax on dividends, which is less than income tax and less than the day trading tax. If you day trade, your tax is going to be higher. But if you just do dividends, the tax is lower. It's only 20%. So before tax, this is where I'm at, $180 a month. So if I'm comparing apples to apples, trying to replace my income, I would use this number, because my income tax right now is much higher than the tax on my dividends. But I'm trying to replace my income after tax. That way I'm making more. But anyways, so before tax, I'm making a 35% yield on average, 27.82% after cost. So maybe not all of them, but some of the stocks charge, stock companies charge fees, maintenance fees, and whatnot. Because technically we are shareholders. We are part owners of the company. And so they basically pay us a dividend, but we also got to pay maintenance fees as well. But even still, 35%, 38% after the fees is still pretty good money. So now the 20% tax is not on the total. The 20% tax is on the 27.82. So after tax, 27.82 times 0.8. After tax, it should be 22.25. So let's go back over here. Put in 20%. 22.25. Bada boom. So that is the money you will make on your investment after tax, 22%. That's better than anywhere else. That being said, my IRA, I have a Roth IRA, and it's making about 25%. Actually, no, right now it's at 30%. And it's tax-free. Now, I can't touch that till I'm 59, 60. But now that I'm 50 years old, that's, not very far away. But if I want to retire early, I'm looking at these numbers. So I'm trying to invest in my IRA as well as invest in this, because the IRA is tax-free. So there you go. Alright, back over to Robin Hood. Alright, let me pause this. Okay. So that's how I keep track of all my stocks. So now when I go back over here, it updates the information in my notifications on said stock. That's the reason why I like Robinhood the best. Robinhood makes it easy to use on the phone. Now on a PC, I don't know. I don't know who's better. So now it moves those to the top, and now tomorrow when I get paid, or tonight at midnight or whatever, Cash App Pay notifies you at midnight. These guys notify you in the evening sometime. Around 7:30 p.m. which you can't invest at 7:30 p.m. You have to wait till the next morning, or Monday through Friday, and not on a holiday. So you get your notifications in the evening, and then the next morning, boom, you go look at your notifications, and then you update your portfolio. Pretty easy. So I bought $10 of each of these stocks. Trump coin, Trump, I think that's this True Social, and then whatever this one is. I just looked up Trump and bought $10 of each. So let's do that real quick. Let's see where they are. That one's still in a negative, but it'll go back up. That one's in a negative, but it'll go back up. Oh, that one I can't buy. Not sure why. But it's a day trade, so I'm not really worried about it. I don't typically day trade. That one's down, but it'll go back up. So that's pretty much it with Robinhood. I got some crypto, but I don't really mess with the crypto too much. I got here it is. I got about $75 in crypto. Overall, it's down almost $20. But I'm not too worried about the crypto because I treat that kind of like day trading. But I do it differently. So crypto is basically an alternative means of currency. So what I do is I'll buy the stock while it's down. I'll buy the coin while it's down. And then in the future, if I ever need to buy something with said crypto, then I'll use the ones that are over here in green. But like, oh, you take Bitcoin? All right, well, I got blah, blah, blah in Bitcoin because it's over here in the green. I'm making money on it. So I'll spend that money, that digital money, on goods and services if it's making money. If it's not making money, it's in the red, I'll be like, oh, well, I ain't got no crypto because technically I don't, it's in the negative. So, I'll be like, well, I don't have any crypto right now, but I can do this, that, or whatever, you know. This one right here, USDC, that's pretty much a mute point. I just bought it because it'll probably never make any money. It'll stay at zero consistently. But you know, I can use it as spending money, you know, send and receive. So it's basically just a digital dollar. So if I need to send some money, boom, I'll just put it in here, you know, like, so if my crypto's down, I don't have any crypto that's up, I can just put some cash in here and then send it to somebody. That's basically the digital dollar. And these, I guess, are new crypto that I haven't bought yet, so I need to look at them. I'll buy $1. There. See, that one already went down 2 cents. Unless that was the transaction fee, I don't know. But anyway. So now, later when I got the funds to expend of, I can buy more. So now I got $78 worth of digital currency. Yeah, so I don't really get too much into crypto. I'm not like a die-hard crypto person. This is where my money is. Dividend Stocks. So let's go back. Oh. All the dividends. CMCT. See, this one I had like 35 bucks in, and I've lost $35 or $34 almost. I'm pretty much going, I cashed out some of the other stuff, so I might have actually lost a little bit more. But this is one of those stocks that said they were going to pay a dividend and never did. So that's why, like I said in the beginning, just buy 20 bucks worth. And if they pay a dividend, invest more. If they don't, watch it, treat it like a day trade. If they don't pay a dividend in over a year, I treat it like a day trade. And that's basically what happened with Zim. So, Zim fell on hard times. I had over $1,000 invested. Actually, I had like $2,000 invested in Zim at the time. And the stock fell they did not pay a dividend like they said they were going to pay. And we were afraid they were going to go bankrupt. Here we go. So I had over $2,000 in there at one time. And when they finally paid their dividend, here it is. It was in June of 2024. Like a year and a half, they didn't pay a dividend, and then when they finally paid out, they only paid out like 1%. But I cashed out like $3,000 and made the $1,000 in cash value that I should have made in dividends. So I paid a higher tax, but I got the money that I should have made in dividends on the cash value side. And I basically started treating it like a day trade because they hadn't paid dividend. And then they paid the dividend. It was only 1%. I was like, son of a bitch. But then they started upping the dividend after that again. So I started putting more money in. Now they didn't pay monthly or quarterly like they used to until 2025, I think. So I started investing more in 2025. But I kind of just kept an eye on these guys. Didn't really do much with them. I got paid $6 here, $22 there. That was December of 2024. So that was 6 months they paid. So in January, I put the $22 back in. And I started watching them. I put in like over $100 here. And then I got a $32 dividend. So I put in another $57. So I'll get more money next month when they pay their dividend. So Zim is definitely paying me back more than I have lost on the cash value side. So it's down $20, but I've already made more than that. So I like Zim. Zim's a little volatile. It's a little risky, or edgy, I should say. It's not really risky, it's edgy. But so far, I've made money with Zim. I love Zim. So if you can ride it out, overall, max, I've made $1 on the cash value side. But I've made, over $1,000 off of these guys. So I'm doing good. That's just one stock. So yeah, dividends. Dividends is the way to go. And that way you don't have to worry about the roller coaster so much. Alright, so enough of Robinhood. Going to Cash App. I started out with Cash App. I like Cash App. But it's not as easy to use. It appears to be easy to use. But with dividend investing, it's not. It's probably better. Cash App is probably better if you're a day trader. So like this here, I got paid 11 cents. It doesn't say, or there's no way to click on it and go to the actual stock portfolio like you can with Robinhood. I would like for them to update it so that you can. It would make life a lot easier. See, that's where they want you to drip. I don't drip. I manually reinvest. So yeah, you can't just click on anything and go to the portfolio. Maybe one day they'll update it and make it easier. But as of now, they have not. So you have to manually look them up. NTR. At least they're giving you the stock ticker now when you click on it. So NTR. That'll make it quicker to look it up. Boom. So this stock is down like a clown. It pays 4.47%. Now, what I do is I'll look at this NTR. I'll go over here to Robinhood, enter my password. Okay, I'll go over here to Robinhood and go to NTR. Now, because I can buy this here, I'm treating it like a day trade in Cash App. But if I could not buy it here, then I would treat it like a dividend stock at Cash App. So, but since I can buy it here, then I'm just gonna wait for this stock to go up. Once this negative 116 becomes a positive 104, then I'll sell it. But right now, I'm not doing anything with it. I would reinvest a little bit, but I only have 42 cents in there because I dumped all my money into Tesla. Because Tesla stock went down. Oh, it went back up. So I'm basically day trading with Tesla. I got $50 in there waiting for it to go back down. And I have an auto buy when it goes back down. But, and then I got an auto sell if it goes back up even more. So yeah. So right now I'm up $8.66. They do not pay a dividend. I thought at one time they did, but I guess not. It'd be nice. I would own a lot more Tesla stock if they did. So yeah, price order to sell. Oh, hang on. Custom purchase. So oh, here we go. So when the price gets down to 142, I'll buy another $50 worth. When the price goes up to 482, I'll sell $71 worth. And that's basically what I'm doing. And what I do, how I do my day trading is I'll look at the year. So I'll program it to buy within the next 90 days to buy if it drops down to the lowest point that it has been this year. And then I'll auto sell if it gets to the highest point that it's been all year. And that's how I make my money. You know, without having to babysit it. But it's only good for 90 days. And then after 90 days, you got to reprogram it again. So you would have to babysit it if you had a whole bunch of these. Now see here, this thread up has a gain of 103. Let's see if they pay a dividend. No. So I can sell it now, but I'm gonna wait till it goes up to 104, and then I'm gonna sell it. I can sell it now, but basically it charged me a 2-cent fee. So I try to make sure I sell it at around 104, so that if it drops to 103, well, I'm still ahead. I mean, even now, if it drops to 102, I'm still ahead. Screw it, let's do it. Sell all. Next. Password. Pause video. Unpause video. So, boom. Stock is sold. You sold $3.02 worth of thread up. So now let's go down here. Yeah, so it dropped to 302 whenever I sold when I sold it. I paid a 2-cent fee, so I've only made $1. But that's okay. Made $1. So I got rid of that day trade. Now I got a whole bunch more I got to get rid of. Overall, with Cash App, my stocks are up. No. It looks like they're down. But that's just the stocks that I'm currently holding. Look at the details. I'm up 1% total, $111. My dividends are $474. So there you go. But that's overall. I don't know how to see it for annual. Let's see if it'll update that to annual. No, it's all time. So, yeah. Anyway. So, and then whatever I cannot buy. Oh, let's go back. Now, see this one here. I've got $642 invested. It's down $170. I don't know that I've made $170 off of it. 5, 10, 15, 20, 25, 35, 40, 45. I probably made about $75 total or less. So I'm down $100 on that one, but it'll go back up and I'll keep making dividends. You know, every time I get paid a dividend, I reinvest. So what I'll do is I'll go over here, pays 19.14%. So when I get paid my $5-6, I'll throw in another $19. Unless, so future reference, if I got the extra money, and when I do have the extra money, REITs, ETFs, and index funds, I'm going to treat them like special investments and throw a zero on the number. So instead of $19, I throw in $190. That's only if I have the extra money. If I don't have the extra money, I won't. But anyway. So here's my different stock portfolios. Like I said, with Edward Jones, I have my IRA and a mutual fund. The IRA is making about 30%. Mutual fund's only making about 5%. But I'm about to bump that up to a different mutual fund where it's going to make about 10%. I had to get to a certain dollar amount before I could bump it up to the next level. And it's at that dollar amount now, so I'm going to bump it to the next level. Robinhood, Cash App, Webull, Fidelity, and Schwab. And then E-Trade. I'm not using E-Trade yet. But Robinhood's my primary, then Cash App, then Webull, then Fidelity. And I don't really like Schwab, but I got a little bit of money in there, making money. But I'm thinking about pulling it out and moving it over to Robinhood, because I have it in BITO and I have Robinhood. I have BITO in Robinhood, so I'm thinking about cashing out the money I have in Schwab when BITO stock goes up, and then just move the money over to Robinhood. So that's basically how I do it. Oh, what the fuck, idiots. Stupid ass drivers. They can't wait for you to pass somebody. They gotta pass you. It's like I try to give the people that I pass a space cushion before I jump in front of them. I don't like cutting people off because I don't like getting cut off. But then if I give them too much of a space cushion, then people get pissed off at me because I haven't moved over yet, and then they try to fly around me on the right. And sometimes I'm already starting to make my move, and they're like impatient, and they're like wanting to go around me on the shoulder. And it's like, if you just wait 1 minute or 2 seconds or 5 seconds, you might be able to go around me on the left. But, you know, anyways, people are impatient. So anyways, these are my stock portfolios. Overall, not counting what I have in Edward Jones, because I can't track it in my dividend tracker. Overall, this is what I have, and I've not got all of Cash App stuff in here because I'm not counting my day trades. I'm only counting my dividend stocks. So I still have like my crypto and my day trades, my old dividend stocks that are in Cash App that I'm treating like day trades. I'm not putting them in here because I'm trying to be organized, and I plan on cashing those out, so I'm not counting them. So I make a little bit more. I have a little bit more invested than what this says I have. But yeah. And it's been a little nerve-wracking the last couple months because I'm trying to get this. I've been trying to get this number up over 200 since like November, and it's now April. So every time I get it up to like $150, then the next month rolls over, it drops back down to like 130 something. And then I gotta build it back up again. Build back better, but in the long run, it'll pay off. Because if you look at the long run down here, the dividend growth over the last 5 years is negative 28%. But the dividend growth projection over the next 12 months, over the last 12 months is, 12%. So it's actually grown in the last 12 months, even though it's been down over the last 5 years. But it's going to go up. So right now, my annual is $1,600, but in 10 years when I retire, it's going to be up to $2,500. That's if I don't touch it today. If I don't touch it at all anymore, it'll grow to $2,500. But I plan on growing it, so it's just going to keep getting bigger and bigger and bigger. And then when I retire in, say, 10 years, because that's when I want to retire. I really want to retire right now, but I can't. So I will start retiring in the next 5 to 10 years. So there you go. So once I replace my income, which is about we'll just say it's that on average. It's actually probably a little low. Let's say times 52. Once I get it over $70,000 a year dividends, then, and that's net, not gross. This is gross. My current gross income is $70,000, give or take. Once I get my dividends up to $70,000, $75,000 net, then I'll be at divided by 0.8. Then I'll be at 85 gross. I really want 100 gross. So let's say we get to 100. Oh yeah, it'll be 80,000 net. So when I get to 80,000 net, then I'll officially retire. Once I'm making $80,000 a year. So, yeah. So I got a long ways to go. 1600. Yeah. So I gotta basically duplicate what I've already done 52 more times, and then I can retire. So, yeah, it's not a get-rich-quick scheme, but it's the easiest, best money I've ever made. Profits, losses, overall. I've invested a lot of money in IT business, aromatherapy, the tree business, the farm, the sustainable community, all these other multi-level marketing business adventures, all that stupid money that I wasted on all those dreams or pipe dreams, whatever you want to call it, gone. I barely made any money on any of that. The most money I made, besides the tree business, was off the date lines. I had a 1-900 number date line back in the 900 number days, and then I had online date lines back when date lines were hot, back in the beginning. And I made more money on those than any of my other businesses, or my other legal businesses, let's put it that way. But the tree business has probably cost me just as much money as I made, so I really didn't make any money. The date lines probably cost me, the 900 numbers, I made bank on those. But the online date lines, I probably didn't make any more money than I spent. So I broke even pretty much. Well, with the dividend stocks, I'm ahead. I'm ahead of the game. So that's where the money's at. Unless you're a really good business person, really good savvy entrepreneur, making money off of business is hard. But making money off dividend stocks is pretty easy. So for the average bear, I would say put your money in dividends. And actually probably everybody. Put all your money into dividend stocks and then use the dividend stocks to fund your dreams. That's what I would do. Or put all your money into dividend stocks, live off the dividend stocks, and go chase your dreams. Or work a second, live off the dividend stocks and work a JOB to invest in your dreams. Or whatever, But basically, have the dividends supporting you and taking care of you before you go to the next level. That's what I would do. What I'm planning on doing for my next level is real estate and aromatherapy and the farm. So I'm going to be buying up, once I get my dividends up, I'm going to be buying real estate and doing Airbnb type of situations because we live off of the lake or near the lake. So I'll be buying lake properties and Airbnb-ing it. And then I'll hire a property manager to manage it for me. So I don't got to do the work. But really, I might still have to do some work, but I won't have to do as much. But really, putting your money into real estate investment trusts is even easier. So I might not even do that. I might have a couple things to keep me busy, keep me from being bored. But I might just do my farm and do my aromatherapy and call it good. Live off the dividends. But I don't know. We'll see what happens with the future. But yeah, I just mostly was making this video for a friend to show her how to get started with the dividend tracker and dividend tracker and the dividend scanner with Robinhood. And like I said, just throw in $20 into each stock, and then whenever they pay you, reinvest $20 or whatever you want to reinvest, whatever you know. And you can study the stocks. I do. I just don't have time to study all of them as much as I want to. But study the stocks, the ones that are more stable, the ones that are paying out better, and have a longer threshold, like I said, REITs, ETFs, and index funds. Put more money into those. And other stable stocks like McDonald's, I wouldn't eat there, but I'd buy their stock. But McDonald's, I don't know, what are they paying? They're probably not paying very much. McDonald's. I mean, you'll make more money probably on the cash value side of McDonald's than you will off dividends. They pay 2%. So, if you're looking for generational wealth, McDonald's is something to invest in. Pass down to your children and your grandchildren. Like the company I'm working for, they only pay like a 1% dividend. But look at their stock. It's only going up too. So you'll make more money on the day trade than you will off the dividends. But anyway. Alright. Blee, 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 blee. That's all, folks. Alright, bye.